Back with closing trades, and it's that time of the day where we get you an insight from Deloitte India on what to expect from the budget. The theme for today's discussion is agriculture. We have Mr. Srinivas, the partner at Deloitte India, joining us on the show. Mr. Srinivas, hi, good afternoon, and thank you so much for your time. Really interesting insight in the report that India employs agriculture and allied sectors, and I mean these sectors, they employ 46% of India's workforce. We are aiming for productivity to be boosted by 1.7 times. Talk to us about, in the run-up to 2047, what kind of announcements or what kind of provisions are needed to reach this target, and what are you expecting to hear from the budget?
Yeah, thank you. So I think as we get into the budget, India's agriculture story, right, should no longer be about food security alone, right? It actually has to orient towards income resilience, competitiveness, and sustainability. Saying that, the budget has to look at the challenges that we face in the current agriculture scenario, right? It could be income volatility due to climate shocks, global price cycles, and fragmented market access that we have. The rising cost of cultivation for farmers, which include agri inputs cost, energy cost, and labor cost, compressing the margins, right? The credit asymmetry that is there. Smallholder farmers usually struggle to access affordable and timely finance despite several schemes that the government of India has launched, and the post-harvest losses, right, especially in the perishable segment. And lastly, I think the low value realization, because India produces a lot but captures limited value due to weak processing and branding, right? The core challenge, I think, when you look at the budget that is going to come in and has to address, will not be the production itself, but it has to move into a more whatever schemes and initiatives that the government of India in the budget could come in, should focus on demand driven agri food production systems driving profitability, predictability, and sustainability. Yeah.
Right. Okay, Mr. Srinivasan, thanks for that. Srinivas, pardon me, thanks for that view coming in. Talk to us about where in the agriculture basket is more policy support needed. Is it towards dairy? Is it horticulture? Is it animal husbandry? Other sub-segments that fall under the broad agriculture basket? What are you expecting to hear there?
Yeah, so the maximum impact, I think, when we see in the agriculture value chains, right, agri-food value chains, would be in horticulture and cash crops, where farmers make a higher income compared to the rice, wheat, cropping systems. It would be animal husbandry and dairy and aquaculture. And further to it's also in the food processing sector, which actually integrates both backward and forward, right? I think those are the sectors, I think, where the government of India in the budget has to push in, and these sectors actually give or create more income per acre, more jobs, and more but they need investments into R&D, storage, processing, right? The cold chain infrastructure, and but better market access models. So we need to look at building more vertical led growth in crop value chains, where India could target scale in growth and stands differentiated and competitive, right? So the budgetary allocations have to happen in particular in identified crop value chains or allied sector value chains, where India can become competitive and reach scale, right? And then benefit the stakeholders operating in the value chain.
And Mr. Srinivas, we understand that agriculture, of course, largely is a sector that is very largely dependent on the weather. If there is any provision that the government could make to reduce the reliance or the impact that adverse weather conditions could have, for example, last year, monsoon started about 9 days early, which worked in the favor. But the additional monsoon that we saw also played spoil spot for some of the crop classes. Talk to us about any policy support, if at all, that could be put in place to reduce the reliance on climate and the dependence, rather, on favorable weather.
Yeah, so I think we need to build our data systems, right? The entire big data platforms, right, to capture our entire natural resources, which include soil and irrigation infrastructure, including climate, right? So our robustness to capture data, which will actually give you a lot of enablement to predict what is going to happen, right? The predictability has to improve to actually make the entire approach towards a climate resilient model, right, for farmers to embrace the changes that are going to come in. And this is going to stay, right? The climate change is here to stay, right? And then there's going to impact particularly the agriculture value chain and the climate volatility is now a structural risk and not a seasonal disruption, right? And we have a lot of rain-fed regions and smallholders getting exposed to this situation. So, our again the expectation of the entire industry and the stakeholders could be to bring in initiatives where climate resilient models could be supported by government in the budget. There could be a lot of structural initiatives on creating a robust crop insurance platform using data and technology, and incentives for sustainable practices in the value chain, where it could be soil health, water efficiency, or carbon smart farming. And it could be regional specific strategies rather than one size fits all, right? So I think those are the elements that I think the government of India should look at when it's coming up with the upcoming budget to create to address the climate risk, and it's going to optimize the entire economic risk for agriculture. So the focus should be to shift towards more climate resilient seeds, micro irrigation, better crop insurance, and incentives for sustainable practices, especially for small and rain-fed farmers.
And Mr. Srinivas, talk to us about the impact that we've seen on exports of our agri products from the US, the tariffs, and the kind of impact that it has had, and what policy support can be put into place to ensure that even though we have a reduction in exports, these farmers do not face face a very adverse impact of that, and they continue to be strengthened in terms of their production and their sales.
Yeah, thank you. I think we from a US exposure, we have largely aquaculture. Like the shrimp export is one of the key sectors which has got impacted because of the duty fluctuations, right? In the recent it was a recent trend of last 6 months or so, ad hocism in terms of the tariffs on it. But largely, I think we our exposure to US in terms of a holistic basket will be limited, except few sectors, few commodity space, right? It could be soya, DOC, and aquaculture, right? But I think from an export opportunity, I think we have a huge opportunity sitting in front of us, right? So we currently have to move up the value chain if we have to untap the export opportunity in front of us, right? From moving away from a volume exporter to more value-led trusted supplier is the approach that we should take. We should have a stable export policy regime. The predictability matters more than incentives here. Export infrastructure near production clusters needs to get created. So a lot of support from the government in terms of policies and incentives to accelerate the entire testing infrastructure, traceability, logistics, right? So those, I think those are the areas I think it will help stabilize the whole export. The vision that the government of India has to double it in next by Viksit Bharat 2047. I think we wanted to export in the agriculture commodities. And particularly the market access, right, and standards alignment. So we need to align our entire agri-food value chain standards to meet global requirements, right? Whether it's EU, Middle East, and ASEAN, which are the largest large areas where we export, and we need to create a brand India as a storyline, right? Again position quality, sustainability, and traceability. What exporters need mostly is policy stability, better testing and logistics infrastructure, and support for branded processed food exports rather than raw commodities. So the next phase of growth, agri exports, is not about shipping more. It will be about earning more per ton, right, of what we are exporting, which will again benefit all the stakeholders operating in this value chain.
And lastly, Mr. Srinivas, before we let you go, talk to us about the importance of building up the digital public infrastructure and also a whole phygital ecosystem to give a push to agri-tech. How important is that going to be?
Absolutely. So digital public infrastructure, again, like the UPI and the digital stacks that we created in other areas, I think digital public infrastructure can be transformational for agriculture as well. AgriStack has laid a foundation for farmer identity, the land records, and data integration. Platforms like AgriStack can improve subsidy targeting, credit access, insurance, and advisory, much like the UPI transformed payments that has happened in the country. If private innovation is enabled on these public rails, it would actually speed up the whole transformational elements, right? What budget should signal again is interoperability, the data governance, and farmer consent frameworks, which again is critical, right, to protect the whole interest of the farmers and the entire standards that we have in the agriculture production systems and further on in terms of value addition. And moving away from pilots to more scaling up and not just proof of concept will be the going forward approach. As we build this entire digital public infrastructure, we have to go from a horizontal led approach to more vertical led approach. As I spoke earlier, we need to identify crop value chains where India is competitive, where we could achieve scale, and where we could differentiate in the global markets. Right. So I think that's the way I think DPI has to get built, where the entire value chain and the stakeholders in the operating in the value chain could get benefited.
Okay, Mr. Srinivas, it was so good to be speaking with you today. Thank you so much for your time and your insight. Thanks a lot.
Thank you. Thank you so much. Thank you for the opportunity. Thank you.
Thanks so much. Okay, viewers, with that, time to slip into a very short break. Just taking a look at the market right now, it's a 0.5% uptick. We're back around those 25,300 levels on the Nifty. The India VIX has cooled down about 2.5% today. Nifty Bank also continues to hold on to that gain of 0.7%. Advance decline ratio still continues to favor the advances by a mile. Dr. Reddy's very steady at that 5.25% uptick. BEL, Adani Ports, Adani Enterprises, Tata Steel, Tata Motors PV looking good. On the flip side, it's Eternal that is now lower by about 2%. So those initial gains that we saw after the street cheered the Q3 numbers, that has entirely fizzled out. It's Titan, SBI Life and Aisha that are all about 1% lower in trade. With that, time for a very short break. On the other side, we're going to be speaking with the management of Vikram Solar and also getting stock specifics. So stay tuned and we'll be right back.